Hello guys, what's up? So in today's video, I will be sharing a very accurate trading strategy. It's based on the Trade ATS software. And this software, it's actually a very good software. It helps you to find opportunities in the market with a very minimal stop loss and huge profit targets. So it's very common to be able to make 1 to 9 risk to reward ratio trades with this kind of understanding that you get from using this Trade ATS software. It actually helps you to see where the liquidity is in the market and where are the expansions and the contractions. So the basic idea for this software is that the market always moves from liquidities. Like these yellow lines are the liquidity lines. You can see where the market has the liquidity from previous trading sessions. And the market will always move from liquidity line to liquidity line or reverse to another liquidity line. So the market is always moving between liquidity lines. Now, just to simplify, liquidity zones or lines are areas on the chart where the market makers, the banks and the big institutions, they exchange the contracts for that currency pair. So it's where big money usually trades, and either they are going to be pushing the market, like in this example here, liquidity can help push the market, or as in this example here, they will help to reverse the market. So here we will, in this video, I will try to explain one of the ways I have found very useful in using this software. And it helps you find very good, accurate trades. I use it usually for day trading on 5 minutes, but I will just explain the idea and then we will go to the basics. Now, as you can see, we have the lines. Now, the yellow lines and the blue lines are the liquidity lines. Now, the white line here you see, or here, these are called like the balance lines for these boxes. Now, whenever you see that you have a red box, this means that we've had like a complex going out of the contraction. So this was like the contraction in the market, like a small contraction, small contraction. So whenever you see a red box, it means there was a complex going out of this. The expansion was not like straight like in the gray line. There's a gray, boxes. In the gray boxes, you will see that here it's moving away from the liquidity lines. And then when we have a gray box near to it and it closes below the balance line, you see how it pushes down to the targets of the liquidity lines, which you see here. Now I will, in this simple video, I will just share with you the basic pattern that I use to make trades which are 1 to 9. Okay. Now I will go, for example, to trades that I have been able to trade yesterday on the New Zealand dollar. So what was the idea behind the trade? First, in the first step, we have to look for the move to start from long-term liquidity zones. So this was a liquidity line that has been formed before the session started. So before the session started, we look at liquidity zones to be able to determine where is the move going to start. Now, for this strategy, what I do, I always start analyzing the market at 8 a.m. This is UTC plus 2 or GMT plus 2. And I trade until this red timeline here. It's around 18:00 GMT plus 2. Okay. So as you can see, the New Zealand, it first touched the long-term liquidity line. This is the New Zealand, and then it went down. Now, as you can see here, it formed several contraction boxes and then continued down on the first one, on the second one. Now, my trading strategy is based on the following. Once the New Zealand USD touches the long-term liquidity line and crosses, as you can see here, the candle that crossed, the first candle that crossed the balance line from previous trading, then formed a expansion box and continued down, forming taking like the short liquidity here. Now this proves to me that this move is the first move. It's valid. We don't trade the first move. What we have to do, we have to wait until now. We know that we are going to sell the market, not here, but after this move happened. So now we know that we are going to sell the market because first it took liquidity from long term, then crossed the balance line, confirming that it's strong enough, and then forming an expansion and going down, taking more liquidity. This is more confirmation. Now what I do, I have to wait until the first retracement to a sell zone. So for me, the sell zone, whenever it goes back and takes a short-term liquidity. So here it's a long-term liquidity, here it's a short-term liquidity. Now the first time it goes and closes above a short-term liquidity and it forms the first bearish candle. Now, why is this a bearish candle? Because this is a bullish candle, and then the following candle was, you can call it a hammer or whatever. It's just a bearish candle for me. Now, it formed a bearish candle. Now, what I would do, and closed below the short-term liquidity. What I did yesterday, and what I do for this kind of trades, I would immediately put my trading entries and targets. So the entry will be here at this level. Okay. The stop loss will be above this one. So let's say 4 or 5 pips. Now the targets I have here, you have the 400% and the 900%. Now what do they mean? So the distance from here to here is the risk, the R, and this is 8R and this is 3R. So this is the first one here is 3 times the risk that I'm taking here, and this one here is 8 times the risk that I'm taking here. Don't confuse 400. It's not 4 times because it's just 100 is just where the candle closed. So 400 here is R. This is the R. This is 3 times the R. This is 8 times the R at 900. Now my target is always 900. So it's 8 times the R, the risk I'm taking. But whenever the market will reach to the 400, I will be moving my stop loss to break even. So I expect that the market should reverse from here and come to this level. Now I move my stop loss to break even, and then I expect it to go to this level. So this is how I use, in a simple way, the ATS indicator. There are lots of other ways to use it, but this is one of the ways, and I found that this works very well, and lots of opportunities are presented every day using this method. So thank you for your interest in this video, and if you have any questions, feel free to ask me. And if you need any help with passing your challenges or learning this strategy in a personal, private one-on-one session, also we can do this online. Okay, thank you very much. If you have any questions, contact me in the links below. Bye.